Hello and welcome back to the Tip TV Mining Show in association with Blytheway and Berridolbear. For the second half of the show, John and I will be speaking to David Cather, CEO of Avocet Mining. Welcome, David.
Thank you, Beth.
Can you start by giving us an overview of Avocet Mining and what you do?
Yeah, sure. Avocet Mining really comprises three principal assets. That's an operating gold mine in Burkina Faso, which has been in operation since late 2009. It's got a nearby growth project called Suma, about 25 kilometres to the east, which has 675,000 ounces of resource currently, with more to come if we do more drilling. And an asset in Guinea, which is 3 million ounces, and we recently announced an earn-in deal with a Moroccan company called Managem for its future development. And we have a small head office here in London. So that's a very brief overview of Avocet. We're main board listed, not AIM, which will confuse a lot of people. Although we are quite small market cap, but with a objective of getting back to where we should be.
Avocet's had a long history, and it's been very well supported by the city over many years. The move into Inata, I thought, was a very good move, but of course, like any gold mine, it's had its issues over the years. Talk a bit more about how you've turned that around and what's coming through.
Yeah, I joined Avocet in April 2012 when the strategy was very much one of expansion and growth. The last thing you want to be is a single operating mine in West Africa in a landlocked country with a low grade, quite challenging from a metallurgical point of view deposit. There was an acquisition in contemplation at that time, but unfortunately with the profits warning we gave in June 2012, that put that acquisition on the back burner. The then CEO resigned, and I was handed the challenge of turning the company round, which has indeed been immensely challenging. We had a large hedge in place with Macquarie Bank. We had a very complex ore body, which we didn't fully understand, to be quite frank. And come April 13, when the gold price went down $150 on the day and had continued its downward trend for the next couple of years, it became extremely difficult, and cash management became absolutely the prime focus. I think a few key events happened. In October 13, we were able to raise $60 million of debt from a local Burkinabe bank called EcoBank, and that enabled us to buy the hedge out. And that was a key event, but swapped a hedge for debt, which I think we didn't have too many choices about that. But also we were able to borrow $15 million from our number one shareholder, Elliott, which enabled the Guinea project, which was coming up against deadlines with the expiry of the exploration permits. If we didn't convert those licenses into a mining license, there was a very real risk we might have lost them, and we'd spent close to $60 million defining a 3 million ounce ore body at that point. So there was a lot of pressure on us sort of to do things, and as I said, cash management became absolutely the focus, quite frankly, to survive.
So you've cut out some of the high cost stuff, you've solved the problem with the hedge. But Burkina Faso is known for some amazing gold discoveries. The government has been supportive. What are you doing now to make this add value for investors?
Yeah, the Inata mine has been problematic. As we downsized the mine by reducing pit shells from $1,400 initially down to $1,200 and then down to $950, essentially high grading the mine, it shortened the life of mine. And with the debts we had, I mentioned $60 million, and we've now got that down to $25 million, but we also have $25 million of trade creditors to repay and some other overdrafts and VAT advances. So still about $60 million of debt. And the life of mine at the moment is inadequate to repay all those debts at the current gold price. I don't believe in hope management of the gold price going up, so we have to do other things to grow that life of mine. Three things we can do. We can re-optimize the existing pits within the mine license. as the gold price has gone up, it presents that opportunity. We can do further drilling on near mine deposits. We've got nearly 300,000 ounces of inferred resources within 7 to 8 kilometres of the existing mine licence. If we can allocate about $1 to $2 million for drilling, we can grow those resources, improve the confidence levels, and look to get them permitted to haul that probably oxide ore to the life of into the ROM pad to extend the life of mine. And thirdly, we've got the Suma deposit. Suma is a 16-kilometre trend that we've proved up from aeromag surveys, auger drilling, and indeed an intense drilling program where we've proved, as I mentioned, 675,000 ounces at a 0.8 gram cut-off grade. The critical thing with Suma is that the geological setting is entirely different to the Inata and Minfo trends. There are no preg robbers there. The metallurgy is much, much simpler and more benign for treatment through the Inata processing plant. So we're quite excited about the Suma potential. Yes, it is 20 to 25 kilometres from the Inata ROM pad, but we wish to advance that as the one major growth project for Avocet. We need to spend between $5 and $7 million to get it to the state of a mine licence application to the government. And sure, I'd be very, very confident that the government will approve that as a new mining licence. Under Burkinabe law, it will be a separate operating company. And 10, 12 years ago, there were no operating gold mines in Burkina Faso. So they've gone from 0 to 7 or 8 operating mines now. And the previous Minister of Mines had a vision of at least 20 operating gold mines. It is one of their major sources of export revenue and makes a major contribution to their GDP. So provided we do the work professionally and competently with due regard to the environment and social impact, which we will do, of course, I'm very sure we would get a mine licence application passed by the government for Suma.
So Suma should be much simpler, much lower cost. It's very close to your Inata mine, so I'm guessing you can use the infrastructure.
Absolutely. All the infrastructure's there. As part of Inata's infrastructure, we've got a major, what's called a barrage, where we've got 100 million cubic metres of water for supplying Inata. That is going to be there for the new project. There's a mine, workshops, the processing plant, a camp, all the infrastructure's there. So you're quite right, it'll be a much, much lower operation than when Inata was first established.
I mean, to use a technical term, that looks like a no-brainer from an investment perspective.
Absolutely, it's a growth project. I'm sure the operating margins will be attractive. Obviously, Avocet is a big play on the gold price. We're unhedged, having bought the hedge out, and at $1,200, $1,300 gold, I'm pretty confident Suma is going to be a very, very attractive project indeed.
And you mentioned Managem, the very well-respected North African mining group with all the credentials. What's going on there?
We announced a deal, an earn-in deal, where they would put in $14 million into the Trike project. On first closing of the deal, which hopefully will occur before the end of this year, Avocet will receive $4 million and give up 40% of the joint venture project to Managem. They will commit to spend a further $10 million to progress Trike, not as a heap leach project, which was the feasibility study we submitted to the Guinea government and got a mining license for it, but as a CIL project, which would have the capability of exploiting the entire 3 million ounce ore body. So we're very excited about that. Having spent $10 million and produced a bankable feasibility study, that would give the Managem the right for a further 30% of the project, i.e. they get 70%, provided they can identify or prove up 1 million ounces of reserves. If they get less than 1 million ounces, they'll only get a further 20%. So it's a sort of a 60-70 investment or interest they will have in the joint venture, and it's going to be very important for Avocet's 30% residual share that we are able to follow our money and raise raise money at construction so that we're not diluted. I think it's going to be a very, very attractive project. Again, low cost, in quite a good jurisdiction. I think the Guinea government's been incredibly supportive of Avocet over the years. They granted us a mine license. They recently gave us a 3-month extension to enable this deal to complete. And again, it's another opportunity for Avocet, long-suffering Avocet shareholders, to actually see some value accruing. The project's got about a 42-month timetable to first gold. A lot of work to be done, but I'm very confident, as manager, as an experienced operator, and really understand the project and the challenges ahead, that they will deliver that project.
So to wrap up, really, I think for investors, they're buying into what is a highly leveraged gold mining company, but where management have been cutting the cost base, so there's a benefit there, and the gold price seems to be going up. So looks to me like you get 2 for the price of 1.
Absolutely, and that has been one of my focus during this difficult period. We're not in control of the gold price, that is absolutely for sure, but we are in control of our costs. At the Inata mine, when I became CEO, there were 1,100 employees. We're now down to 550. We've done that by reducing the pit sizes, and we've gone from annual tonnes mined from about 35 to 40 million tonnes down to 12 to 15 million tonnes. That's had a dramatic impact on our cost base. And at head office, we've gone from 18 full-time employees and 6 non-executive directors down to 3 non-executive directors and 3 full-time employees. So a dramatic shift in costs from something like $14 million a year down to 2. And that's all part of the plan to survive, get through this difficult period and get back into a growth phase.
Great news, and 2 new mines hopefully to come.
Absolutely right, John, yeah.
Thank you.
Excellent. Well, thank you very much for your time, David. It's been great having you on the show. Hope to have you back soon.
Thank you, Beth. Thank you, John.
Join us next week where we will be catching up with Caledonia Mining. We will see you then.